Good morning and welcome. You're watching Market Cafe on ET Now. I am Harsh Saita and with me is Ankita Saxena. Ankita, truncated week of trade. We had a holiday yesterday. We have a holiday tomorrow. That's a big plus.
Yes.
That's the thing. That's the thing that motivates us to come to work. But
absolutely, Harsh.
Jokes apart, in this show we talk to you about all that's happening in global markets, what's happening on the global as well as the domestic front that will move markets, and lastly, we also speak about specific stocks which you should keep on your radar. So let's start off with that first piece, global markets, and Ankita generally takes that piece up. So Ankita, talk to us about how global markets have done. Yesterday we didn't analyze what global markets did on Wednesday, so if you can give us a highlight on what's happening.
So Harsh, global markets seem to be the banking crisis fear seems to be abating, and also the jobless data that came out yesterday showed that the labor market is also cooling off and the Fed rates are really working. The S&P 500 rose as investors, of course, bet that the worst of regional bank crisis has passed. The S&P 500 added 0.5% during the session, and it also touched its highest level since March the 7th. The Nasdaq Composite advanced 0.7% as tech stocks continue to see renewed investor interest, and the Dow Jones Industrial Average added 141 points. Now, today is the 31st and the end of the month. So for the month, the Nasdaq Composite is up more than 4%. The S&P 500 has gained 2% in trade. Now, another key important number that came out yesterday was the weekly jobless claims that increased to 1,98,000 last week versus 1,96,000, and that was more than expected. Now, that shows signs of labor market cooling off and the fact that the Fed rates are really working on the labor markets. Now, the U.S. Personal Consumption Expenditure Price Index, it is the Federal Reserve's preferred measure of inflation, is slated for release later in the day today. A very important number that we will be closely tracking and all the investors will be watching out for. Also, the European markets closed up higher, continuing the positive trend, the positive momentum that they were seeing before a day prior to that as well. The Pan-European Stock 600 index closed 1% higher with most sectors in the green. DAX was up 1.2%, FTSE was up 0.7%, and CAC was also up 1% in trade. So a good positive handover coming in there, Harsh, on Friday today. Tell us, how's the crude looking like?
Well, yes, very interesting moves in crude, Ankita. So firstly, thank you for that global setup that you've given us with regard to how global markets have looked today. Let's quickly move to crude now. So crude largely continues to remain under pressure. It has been under pressure, and by pressure I don't mean downward pressure, I mean upward price pressure. So it's really gaining ground. Nearly all that it lost is what it's gaining. In fact, we're seeing Brent just below that $80 a barrel mark. In fact, around $79 odd a barrel currently. That's where Brent is at, and we're looking at WTI oil also at around $74.50 a barrel. So from those sub 70 levels, the rebound has been quite strong. And again, I'll take you all through reasons. The Kurdish pipeline going to Iraq has obviously halted exports. So that's 450,000 barrels of oil, 0.5% of what the world consumes on a daily basis. So that's a huge, wipeout in terms of what's happening. But that's been offset by US stockpiles actually depleting. So US stockpiles over the last week have depleted by 7 million barrels. And, that compared to what analysts were projecting would be a 100,000 barrel increase in the US crude inventory. That's actually gone down by 7 million barrels. So that clearly shows that the US is actually aiding or is making sure that there is a lid on how much oil really rises, and is keeping a lid on the volatility on oil. And that's obviously a positive because you don't want oil to run away. Also, there are analysts at Citi projecting that at some point there will be a resolution between in Kurdistan, and that will mean that at least 200,000 barrels of the 450,000 barrels that have been blocked currently will get eased off and will come into the global marketplace. So a couple of those factors will start to play out as well, but at the moment the first two factors, which is the Kurdish 450,000 barrel stopping 450,000 barrels from coming on the market, and the second is US inventories falling, have really played out, and you can see that impact on both WTI and Brent. Sorry for the long explanation, but that's where oil is currently at.
Thank you for the detailed explanation, Harsh. That really sums it up where the crude is at and what are the factors that are really playing out. But let me take you through all the events that you need to keep a track of today. Of course, we have the India fiscal deficit number that is likely to come out today, and globally we have the UK GDP current account balance number that is likely to come out. We also have the China balance of payment, current account balance, and the PMI data that is likely to come out today. Also in corporate action, for Welspun Enterprises, the buyback offer will close as of today. So these are the events that we will be closely tracking. And Harsh, take us through all the global news that made headlines overnight.
Well, yes, the first biggest story, Ankita, is that ex-US President Donald Trump has been criminally charged. The New York grand jury has voted to indict Trump over a hush money payments made to a porn star ahead of the 2016 election. The details of the charges he faces are yet to be fully released.
And on to the latest from the banking crisis scenario, US Treasury Secretary Janet Yellen has said that the banking regulations might need further tightening after the landmark collapse of the Silicon Valley Bank and the Signature Bank. Adds that the efforts to bolster the financial system looks incomplete after the recent turmoil.
Let's shift focus to weekly jobless claims. And the Americans filing for unemployment grew more than expected now. Initial jobless claims for the week rose by 7,000 to 198,000 versus economists' projections of 196,000.
World Bank submits long-awaited reform plans to boost annual lending to middle-income countries by around $5 billion. This with a view to fight climate change and other global crises while also protecting the bank's top-tier credit rating.
Well, and Indian-American business leader Ajay Banga is all set to become the next president of the World Bank. After the month-long nomination window closed yesterday, no other alternatives announced to Banga, and that's what's led to his appointment. The former MasterCard chief was tapped by US President Joe Biden last month after current President David Malpass announced plans to step down almost a year early.
And small satellite service provider company Virgin Orbit is ceasing operations for the foreseeable future after it failed to secure funding. The company is set to lay off nearly all of its workforce. CEO Dan Hart says they have no choice but to implement immediate, dramatic and extremely painful changes. The stock plunged as much as 16% in after-hours trading.
Well, and this is one thing that at least Ankita and me look out for, which is the ET Now explainers that Vikram gives. Let's quickly take you through what it is. French citizens are protesting President Macron's new pension bill, which asks to increase the retirement age in the country. But what are the spillovers of that in other countries as well as companies back home? My colleague Vikram Oza explains it. Take a look.
So what should be the ideal retirement age? Should it be 58? Should it be 60? Should it be 65? Well, recently we saw these protests that we have reported. Those protests broke out in France over President Emmanuel Macron's decision to push the retirement age from what was 62. He wanted to push it up to 64, and he holds his ground on that. Back home in India, there's a similar dilemma coming through, although without the kind of protest we've seen in France. You see, the retirement age in India is among the lowest globally. Countries like the United States, also Italy, they've set the retirement age at 67 years. Spain and UK have set it at 66 years. But in India, the retirement age is between 58 and 60 years. Now, many in India Inc. are rather eager to extend the retirement age ceiling. While private sector employees are typically, they have this retirement age of anywhere between 58 and 60 years, there are many companies that are mulling increasing the retirement age to anywhere between 60 and 65 years. On the other hand, the retirement age for central government employees is 60 years. A section of India Inc. has already revised its retirement age upwards, and reports are now suggesting that several others are considering similar moves. Now remember, just last year, JP Morgan, which has 50,000 employees in India, raised the retirement age to 65 years. It was 60 for them. In a similar move, we've seen HR solutions provider Genius Consultants raising the superannuation age to 60 years from what was 58 years. So why are these companies keen to extend the retirement age? Well, firstly, they want to cater to the rising global demand for experienced leadership profiles. It also makes sense business-wise, as companies can now delay payment of retirement benefits like gratuity and also reduce pressure on their cash outflows. From an employee's perspective, this would translate into benefits such as medical, term life insurance, accident assurance, all continuing for an additional few years. But then there is a flip side to this as well. It could also mean a delay in opportunities for people to move up the ladder. And given India's young demographics, it would also mean fewer opportunities for young people to move in. And thus, not everyone is quite on board with this idea of raising the retirement age. There are companies like Tech Mahindra, for instance, who have reduced the retirement age from 58, they brought it down to 55 years. But for the time being, your experience and skills could push up your retirement age. Will we see similar moves across India, Inc.? That's a space that we're watching very closely. Whether we are going to at least consider or start working on raising the retirement age ceiling is something we're waiting and watching out for.
Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is Harsh Saita. It's time to move on to more domestic news flow. Well, India's borrowing plan for FY24, the centre is all set to front-load most of its gross market borrowing for 2023-24. It also plans to raise as much as 8.8 lakh crores of its record 15.43 lakh crore plan for the first 6 months. Now, my colleague Anurag Joshi has all the details, is joining us with the contours of what was said about the borrowing program. Over to you, Anurag.
India plans to issue almost 9 lakh crore rupees of bonds in the first half of the financial year that starts on April 1. Almost 60% of the government's borrowing in the first half from April to September is front-loaded in this period. Now, in the February budget, the Finance Minister Nirmala Sitharaman had unveiled a record government borrowing program of 15.4 lakh crore rupees. After market hours yesterday, the government unveiled the calendar for its borrowing and treasury bills for the first half. Now, significantly, the government has said that it's going to issue sovereign green bonds in the second half of the coming financial year. The government, so far in this, the government had kick-started the issue of green bonds this fiscal year and has so far issued 16,000 crore rupees of sovereign green bonds, and that's 8,000 crore rupees each in January and February. In a related development, the government has has unveiled borrowing of 4.16 lakh crore rupees via treasury bills in the April to September period, and that would be 32,000 crore rupees of treasury bills in spread over 13 weeks during the period.
Well, thanks for that, Anurag. Let's quickly move on. SoftBank backed Unacademy to sack another 12% of staff, or about 380 employees, in a move to make its core business profitable. This will be its fourth official round of layoffs. CEO Gaurav Munjal announced it in an internal memo, which said that every step taken to make the business more profitable has not been enough, and the company needs to go further and deeper. It comes a day after the company said it has hived off the Code Chef, an acquisition it made in 2020. The company had cut its headcount by 1,350 across 2 rounds of layoffs last year, while its subsidiary Relevel had fired another 40 employees in January this year as well. So layoffs on the cards going into 2023 as well.
Right, and moving on, Walmart-backed PhonePe has called off its deal with Bengaluru-based Zest Money over due diligence concerns. And the move comes after months of discussions between both the sides. Sources with direct knowledge tell Economic Times that the development means a huge blow to Zest as the company continues to battle a funding crunch. To add some context for the viewers, the digital payments giant initiated talks with Zest Money late last year to bolster its digital lending forays.
Right, and we have French drug maker Sanofi, which has initiated a process to turn its consumer healthcare business in India into a listed entity through a demerger. The unit's products include leading anti-allergy brands such as Allegra and Avil pain management drug Combiflam and vitamin D brand Depura. The leading vaccine maker is working with Bank of America on the demerger process. About 60% of Sanofi India is owned by Sanofi and wholly owned subsidiary Hoxt GmbH. The rest is held by foreign and domestic institutional investors along with retail investors, of course. The plan is to list the consumer business separately with the shareholding mirroring the current shareholding pattern.
Right, with that, it's time for us to slip into a short break. After the break, we will tell you what are the stocks that you need to keep an eye out for in today's trading session.
Welcome back. You're watching Market Cafe on ET Now. Now let's quickly take you through all the stocks that are in news. Of course, we had a holiday yesterday, so that means that we'll have some more catching up to do, and we have Ashesha who's gone through all of those events that have come through over the last couple of days since market close Wednesday. So Ashesha, talk to us.
Well, yes, good morning. It didn't really feel like a holiday yesterday looking at the quantum of news flow that we had. We will have a whole host of defense counters in focus today on the back of order wins. First up, BEL, and that is because Ministry of Defense has signed 10 contracts worth about 5,500 crores with Bharat Electronics Limited to bolster defense capabilities of the country. The company will be supplying Navy gunfire control system for about 1,700 crore rupees, weapon locating radar for Indian Army to the tune of 991 crore rupees. On the back of this order win that has come through from the Ministry of Defense, keep an eye out on BEL in today's trading session. Apart from this, Lupin will also be in focus on the back of some US FDA action. US FDA inspected company's Pithampur Unit 2 manufacturing facility from the 21st to 29th of March. The inspection has been closed with issuance of Form 483 with 10 observations. The company has said that they will be closely working with US FDA to resolve these issues at the earliest. Apart from this, Tata Power will also be in focus, and that is because the board of directors have reappointed Praveen Sinha as the CEO and the managing director of the company for a period of 4 years with from the 1st of May. And they have also received letter of award to the tune of 1,755 crore rupees. With this, the total order book of the company has now crossed that 17,000 crore mark. So keep an eye out on Tata Power as well in today's trading session. Apart from this, a lot of order inflows have come in for GR Infra projects. They've emerged as L1 bidder for a tender that was invited by NHAI. The project cost of which stands at about 847 odd crores. They've also received LOA from NHAI for 4 other projects, the total cost of which stood at 3,700 crores. And they've received LOA for NHAI for another project which will be done on HAM mode. 740 crores is the project cost. JK Cement will also be in focus, and that is because they've expanded their green cement capacity. They've announced that out of the total expansion of 5.5 million tons per annum, 2 MTPA expansion has now been achieved. Also keep an eye out on Hero MotoCorp, and that is because the board has approved Niranjan Gupta as the Chief Executive Officer of the company. Dr. Pawan Muljan will continue as the Executive Chairman and whole-time Director of the board. So on account of this rejig that has happened, keep an eye out on Hero MotoCorp as well in today's trading session.
All right, Ashesha, we will be keeping an eye out on all the stocks that you just mentioned. Now, well, Motilal Oswal has also initiated coverage on Vedant Fashions with a buy rating, while Jefferies has also initiated a coverage on the SBI card. Now, Investec has also initiated coverage on Indigo with a buy stance, and of course, Ashesha has all the brokerage notes coming in this morning. Ashesha, take us through all what the brokerages are saying.
Well, yes, three initiating coverage notes have come in this morning. First up, we'll talk about Vedant Fashions, where Motilal Oswal has initiated buy with a target price of 1400 rupees per share. They say minimal capex requirements will translate into healthy cash conversion cycle for the company, and ROIC could stand at about 58 odd percent. They're scaling up emerging brands which will be catering to sizable women's celebration wear market, and they believe this will be the key growth driver for the company. They expect the company to report revenue CAGR at 21% for the period FY23 to 25, and they expect company to report a profit at the rate of 22% on a CAGR basis in the corresponding period. SBI Cards will also be in focus, and this is on the back of initiating coverage note from Jefferies, where they're maintaining their buy rating on where they've initiated with a buy rating and a target price of 900 rupees per share. They say penetration into SBI base co-branded card tie-ups will drive market share gains for the company. NIMS, they believe, will probably bottom out in the first half of FY24 and then could inch higher from FY24 to 26. Profit, they believe, could grow at about 20% on a CAGR basis during the corresponding periods. On account of this note that has come in, Jefferies note that has come in on SBI Cards with a target price of 900. SBI Cards will also be in focus. And lastly, Indigo, on the back of note that has come in from Investec, where they are maintaining their buy rating with a target price of 2,500 rupees per share. They say improved competitive landscape could help the company earn higher yields. Improved competitive landscape could help the company. Cost leadership will drive industry leading profitability for the company, and market share gains for Interglobe Aviation could continue. So Investec has given a target of 2,500 on Interglobe Aviation.
Well, thanks for all of that. Stocks in focus to keep on your radar in trade today. So that sums all of it up. Let's quickly move on. Star Health is the other player that's going to be in the news because they had their analyst day, and what they're suggesting, or what the management is suggesting, is that the new expenses of management guidelines that have come through will put other standalone health insurers under some amount of pressure, and that will of course aid Star Health. What they also believe is that the removal of commission limits opens up distribution avenues for Star Health specifically, so that's a big positive. What they're expecting is that competition will not increase despite commissions or the flexibility to give more commissions will not really increase competition there, because commissions are already quite high. But for Star Health specifically, they are expecting an ROE improvement of 2 to 3% post the Indices implementation. So stay tuned for that. Also, they're targeting Banga share to increase from the current 5% to 10%. So that lever will start to kick through. And they also believe that life insurers being allowed to sell indemnity products may not significantly change the growth prospects for Star Health specifically. They continue to expect a premium growth of around 20% on that. So that's a positive. The other piece is that planning, or rather the guidance, is that they will continue to maintain the combined ratio around that 93 to 95%. And on the back of that, Star Health will be in focus as the market breaks down some of this data.
All right, then Star Health in focus. With that, moving on, PNGRB has amended its regulations to allow unified tariff for natural gas pipelines. Now, the regulation has notified levelized ununified tariff and has created 3 different zones. My colleague Somit is here with more details. Over to you, Somit.
PNGRB has notified the unified tariffs which will be implemented from 1st of April, that is tomorrow, and the tariff rate decided is at around 73.93. This rate is lower than what was the recommended rate, but this is the first time that the regulator has come out with such kind of tariff. Now, they have also given zonal bifurcation tariffs. For Zone 1, the tariff is decided at 39.45. For Zone 2, it stands at 74.97, and for Zone 3, it stands at 99.9 per MMBTU. Now, along with this, if you see what will be the impact of this, now for transmission companies like GAIL and GSPL, they are the pipe owners, but the impact on them is neutral. This unified tariffs will have an impact impact on the end users like city gas distribution companies, fertilizer companies, petrochemical users, because they are the end users of this gas, and this impact of the same will depend on the existing tariffs versus the new tariffs that will be depending on the unified tariffs suggested by the PNGRB. Now for Mahanagar gas, if you see, it falls into zone 1, so the tariff rate would increase to around 39.5 rupees from an earlier tariff of 34.7. For IGL, which comes into zone 2, the tariff will increase to 74.97 from the earlier rate of 59 rupees. Now for GAIL, if you see, their units that is the LPG and the petrochemical unit, they are also end users of this gas, and for them the annual hit on EBITDA would be close to around 250 crore rupees as indicated by the company because of the higher unified tariffs. Now for Mahanagar gas and IGL, if you see, the increase in cost would be around 1 to 1.5 rupees per kg, and this is in terms of the CNG pricing that we are seeing. So either the companies will have to hike the CNG prices or will have to take the impact on their books. Now for Gujarat gas, the impact is still not certain because the company has an option to shift the gas source to Mundra, so we'll have to wait and watch how it impacts Gujarat gas. Now what the options Mahanagar gas and IGL have: firstly, they can completely pass on this increase in cost to consumers. Second is that they can adjust the impact against the lower gas prices as and when the Kirit Parikh committee report is accepted. So the next big thing to watch out for the city gas distribution companies is the acceptance of the Kirit Parikh committee recommendation, which will lead to lower gas prices for the city gas distribution companies.
Well, thanks so much for that, Somit. We'll quickly move on. We also have, and it's that time of the month, right, where we see how automakers performed. My colleague Srishti joins in with what to expect from major auto players on their performance in the month of March.
Well, if we talk about the March auto sales data, firstly, let's tell you what are the trends that we are picking up out of the 4 segments that are seen onto your screens. Firstly, if you will see, the commercial vehicle segment is going to be an outperformer this time around. There has been an underlying demand, but other than that, as we have been pointing out, that 1st of April will be the when you will see the RDE norms kicking in, and because of that, the price hikes will be visible on the commercial vehicle segment specifically. That is going to see up to a 5% of price hikes, and because of this effect, we have seen a lot of pre-buying happening in this particular segment, and we are expecting a double-digit growth on a YOY basis in this particular segment. Firstly, then let's talk about the passenger vehicle segment. Here we are expecting a bit of a moderation when it comes to the new inquiries, and this time there wasn't that much of a cheer, festive cheer for the passenger vehicle as well as two-wheeler segment. But for the two-wheeler, a respite is that the urban demand is still holding steady right now. The unseasonal rainfall that we have seen in the month of March for the northern and the central part of India can impact some of the tractor sales, but let's move forward and let's company specific. Let's have a look at what the expectation is from the passenger vehicle segment. Out of the 3 listed players, Maruti, M&M as well as Tata Motors, we are expecting that Tata Motors can show a growth of 5% for the automotive division on a month-on-month basis, but an outperformance can be seen by M&M that can show a growth of 10%. Coming to the commercial vehicle segment, we are expecting a double-digit growth on a month-on-month basis and even a growth on a YOY basis for all the listed players. And if we will see, Eicher Motors, Tata Motors and Ashok Leyland all expected to post a healthy set of numbers, but Eicher Motors VECV could take the lead out here in terms of the growth numbers. Coming to the two-wheeler segment, here the urban demand is still holding up, is still supportive, but the exports are not supportive for Bajaj Auto as well as TVS Motors. Then let's talk about the company-specific numbers. For Hero MotoCorp, we are expecting a growth of 17% sequentially with a number of 4.6 lakhs. For Bajaj Auto, this number is close to 2.8 lakhs of units. And for Eicher Motors, Royal Enfield, watch out for the number 73,000 above units is what we are expecting. And lastly, for the tractor sales, we are expecting a double-digit growth on a month-on-month basis, but unseasonal impact, like we highlighted, could have an impact on the numbers as well. So we will watch out for that data, but do look out for the commercial vehicle segment and especially the heavy commercial vehicle segment. Back to you.
Well, thank you for that, Srishti. Those were the auto numbers. Moving on, Aarti Industries is a stock that will be in focus as of today on the back of the analyst meet. My colleague Sharad is here with the key takeaways. Let's take a look.
Well, yes, Aarti Industries, if you see in the last trading session, the stock went up more than 4%. They have actually snapped out almost 7 days of losing streak. And the important thing is they had an important management meet coming in, and the management did stress upon the macro concerns coming in the FY23. But they said there are some green shoots happening and for expected to progressively improve in FY24 when it comes to the macro demands. And because of that, the order size and the impact of the customer confidence, that will also increase. Apart from that, of course, two reasons are there where the EBITDA is expected to grow between 20 to 25% on a CAGR basis over the coming years, and those reasons are the ramp up of capacities and also the operational leverages which are kicking in. Apart from that, unabated capex momentum is actually making the company future ready, and a strong bullish commentary is coming from the management over there. Apart from that, they are also actually address the concern, especially of actually possibility of doling out ESOPs to actually retain talent, and that's the first actually we are hearing from a chemical company, at least on the attrition part, and that makes this analyst meet very interesting. Apart from that, also the company is exploring opportunities in flow batteries, and of course the chemistry is related to carbon neutrality as well as the long-term contract. So kind of a bullish commentary coming from this management meet, and we could have already seen that in last trading session as well.
Right, thanks so much for that, Sharad. Let's quickly take it through how Asian markets are doing in early trade. So we're seeing gains on the Hang Seng, nearly 2% higher in early trade today. We're also seeing gains across the board. So some of that global positivity percolating onto Asia. We're seeing the Kospi, which is up 1% as well. Mind you, tech stocks really led the rally in the US, and that's what's also aiding stocks in the Asian region. The Nikkei is up around 1% or so, around 4/5%. You can see that on your screens. The SX 200 also in the green in early trade. We're seeing gains of around 2/3% on the SX 200. The Shanghai also up around 0.5% or thereabouts. So we're seeing good gains across the board. But the SGX Nifty, regardless of that, absolutely flat as a pancake, which we're going to go and have Ankita shortly. I'm looking forward to breakfast, but you stay tuned, of course, as we move into the market very, very shortly.